Good morning from our headquarters in London. I'm Kriti Gupta in for Danny Berger. Welcome to the Bloomberg Brief. Let's set your agenda this morning. Backing away, President Trump says Ukraine and Russia would begin ceasefire talks soon, but warns that the U.S. would back away if a deal is not reached. And POTUS headed to Capitol Hill. The president plans to rally House Republicans to unite behind his tax bill as GOP hardliners eye the ballooning deficit. And mounting risks. Jamie Dimon warning against tariff complacency and cracks in the credit market as odds of a downturn rise. A lot of these issues ballooning in the background, but let's see how they factor into these markets because the futures picture is souring, but I'm not seeing panic in the early indications of those opens. S&P futures down about 0.3%. The Nasdaq 100 seems to be where the pain is, down about 0.4% there. In terms of what the tone is being set on from Europe, let's get some of our stocks to watch in just a moment. We're going to get the bond market picture first, though. We are seeing a bid into the U.S. Treasury market, but again, only down by about 1 basis point across the curve. And that's something you're seeing as a retracement, perhaps, of yesterday's move, a 10-year at 4.43. As promised, let's get our stocks to watch here. Bloomberg's Joe Easton is standing by with some of those early movers. Joe.
Morning, Kriti. So a bit of a mixed picture on the Mag 7 today. We are seeing some of the stocks gaining, some of them slipping, but one I've got my eye on is Alphabet ahead of this conference from Google, where they're going to be showing off a load of their new AI features according to analyst predictions ahead of that event in California. The Google stock, Alphabet, up around 0.3% in the pre-market. Then take a look at United Health. We had a big gain in that stock yesterday. We're up around 8%. It was the biggest gain in around 5 years. And we're up another 3% today. The company continuing to trim those losses that followed news of that probe into their Medicare business. And then finally, looking at UBS, the Swiss lender facing potentially having to have $25 billion of capital on its books. The Bloomberg finance team is reporting that they are potentially going to lose their latest attempt to kind of lower that number in terms of the capital requirement. As usual, Kriti, all of these stories and more available on the Before the Bell opening wrap, which will be available on the terminal very shortly.
Bloomberg's Joe Easton there walking us through some of those early movers. The UBS story, to me, fascinating. I can nerd out about capital requirements all day long. We thank you so much, Joe. And coming up, of course, this hour, we are live from the Qatar Economic Forum. Ryan Lance of Concophilips will be joining the program shortly. And then we head right back into the markets. Erik Nelson of Wells Fargo, macro strategist there, talking to us about what the bigger issue is, the deficit or the trade story. We're going to get his view in just a moment. But let's kick it off with perhaps our top story this morning, which is President Donald Trump sparking fears of U.S. disengagement after he said truce talks would begin immediately between Kiev and Moscow to bring an end to the war in Ukraine. Now, speaking after a 2-hour phone call with his Russian counterpart, Donald Trump warned he's going to back away if a deal is not reached.
Big egos involved, I tell you. Big egos involved. But I think something's going to happen. And if it doesn't, I'd just back away and they're going to have to keep going. I would say I do have a certain line, but I don't want to say what that line is because I think it makes the negotiation even more difficult than it is.
President of the United States there speaking about the future of the Russian and Ukrainian conflict. Let's get a little bit more analysis this morning. Bloomberg's Russian economy and government editor, Tony Halpin, joins the program. Tony, just your initial thoughts on how this phone call actually went. Is that a positive that he's saying that there is going to be some sort of phone call, some sort of dialogue between the two sides, or negative that the U.S. is perhaps taking a step back? How are you thinking about it?
Well, I mean, the optimists would say that it's a good thing that Russia and Ukraine are negotiating. That may lead to some sort of agreement that would end the war. But realistically, that wasn't what Ukraine and Europe was hoping for from this call. They were hoping that Trump would put pressure on Putin to agree to an unconditional ceasefire for a period of 30 days or more in order to allow space for these talks. Putin clearly didn't want to do that. Trump was expected by Europe and Ukraine to at least threaten sanctions on Putin to try to push him towards that position. But that's not what happened. Instead, he suggested that maybe he'll walk away if they can't reach a deal. And we have to remember that Russia started this war, so walking away from a war that Russia started is much less of a threat and an issue for Russia than it would be for Ukraine and the Europeans.
Talk to us about that role of the Europeans, though. I mean, I thought it was so telling that Donald Trump not only said he had a phone call with Vladimir Putin, Vladimir Zelensky, and then some of the European leaders as well, which have been notably absent from those discussions. Who takes the lead, if not Donald Trump?
Yes, the Europeans are pretty despondent, actually, it has to be said. I mean, they were hoping and they thought that they had the US on the same page as them, essentially, that if you remember, they issued this ultimatum that Putin should agree to a ceasefire a week ago, and if not, that there'd be new sanctions imposed. Well, that deadline came and went, and it turned out that Trump really wasn't on the same page as Europe. So it's hard to see who steps up if Trump steps back. The German Chancellor maybe is angling for that position. France's Macron is also considered one of the leaders of the European position in trying to get tougher on Russia. But part of the problem for Europe is that it doesn't really have an agreed position that everyone will sign up to. And that's true even in the European Union, where people like Hungary's Viktor Orban are dissenting over the idea of tougher sanctions.
Absolutely, something that we're going to be keeping a very, very close eye on. We'll see if we kind of inch towards progress. If the Europeans can perhaps continue to hold that torch. Tony Halpin, we thank you so much for that crucial context. Let's stay with the policy coming out of Washington and focus inwards, if we can. House Republicans failing to hash out an agreement on a tax bill that satisfies some of its representatives from high-tax states. Now, Speaker Mike Johnson ending a late-night meeting yesterday with some of the holdouts. Let's get some of the details behind the thinking in Washington at the moment. Bloomberg's Joshua Galou joins us this morning. Josh, just walk us through the details here. How should we be thinking about potential tax cuts coming down the pike?
Well, the recent developments are showing what a difficult coalition the Republicans have to bring together on this. Typically, tax cuts are, a mainstay of Republican policies. But what we're seeing here is that not only the level of tax cuts, but the targeted cuts in spending are dividing the coalition. So a couple of the main points that are going to have to be resolved are a big one is the state and local tax deduction. In the 2017 bill that Trump made, these tax cuts that are set to expire this year, they lowered the cap. They put a $10,000 cap on state and local deductions from federal income taxes. And, states like California, New York, New Jersey, where Republican representatives are getting a lot of pressure from their constituents to raise that cap, they're not going to go along with a bill that doesn't lift that considerably. That, of course, cuts into revenues. And when you are talking about the level of cuts that they want to do, $3.8 trillion over the course of 10 years, that's really important. So he's going to have to bring that coalition together. And of course, Trump is headed to the Capitol today to do that. But, he's up against some pretty staunch opponents of that part of the bill.
Joshua, can you just tell us what happens if this bill moves forward? Is that a guaranteed yes to a lot of those fears that the deficit is going to widen at a faster pace than expected?
Well, nothing is guaranteed, but of course, the administration says that this bill this law would spur economic growth, and economic growth creates tax revenues, and therefore the deficit would not widen. That's their sticking point, but economic analysis, and tax analysis basically shows, they estimate that this could widen the deficit by trillions of dollars, up as much as $3.3 trillion. That would bring the debt ratio up, debt ratio to GDP up near 7% in the coming years. So, and we've already seen Treasury markets reacting against that, showing that indeed the markets think that this bill would create a great deal of burden on public finance. So, again, that's another part of the Republican coalition that's going to be tough to bring along here. There are hawks in their fiscal hawks that don't want to see the deficit widen.
Absolutely. How do you do the math around tariff volatility and, of course, the impact of the Doge story as well? Josh Galou walking us through the dynamics in D.C. right now. We thank you so much. Coming up on the program, more from the Qatar Economic Forum, an exclusive conversation with Concophilips CEO Ryan Lance coming up next. But just ahead of that, you're looking at a live panel. We're going to go to Doha, of course, for a live panel at the Qatar Economic Forum. Currently in conversation, the former Egypt foreign minister and ambassador to the United States, as well as KKR chairman of the Global Institute, with our very own editor-in-chief, John Micklethwaite. You can catch the full coverage and conversation on LIVE Go on your Bloomberg terminal. This is Bloomberg.
Israel in 1 second, but David also mentioned Iran. David, do you want to just take that forward? Now that Syria has been brought into the fold, do you think there is a chance of Iran also being brought back into the fold?
That's probably a bit over-optimistic, but there's a chance that there could be a nuclear deal that doesn't have some of the shortcomings of the previous nuclear deal that could enable the lifting of sanctions progressively and so forth as confidence is built, and that could lead to them being a more constructive player in the region than they certainly have been for many decades, noting all the damage that has been done by their proxies in this region and still being done by the Houthis, who have still not resolved the issues there. So I think it's an opportunity that all are working as hard as they can to achieve. You can see the narrowing of the differences between the U.S. position and the Iranian position. No enrichment whatsoever is the U.S. opening. Maybe that ends up being for 3 years, and then you have an opportunity to do something smaller. Again, but you can actually see this deal starting to come together. And assuming Iran then also stops some of the terrible activities that they're doing through proxies in the region, which have been so destabilizing, then you can start to see the contours of something that could be much more positive.
Do you think, I'll come to Nabil again in a second, but do you think that regime change is now slightly off the table with Iran? I remember years ago...
This is Bloomberg Brief. I'm Kriti Gupta in London. We head back to the Qatar Economic Forum in Doha, where our very own Francine Lachwa standing by for an exclusive interview. Francine.
Kriti, thanks so much. I'm delighted to be joined by Ryan Lance of Concophilips. Ryan, thank you for joining us. We were on stage together, also with the Qatar Energy Minister, talking about demand and supply. First of all, how do you see U.S. shale evolving in terms of production, given the prices?
Yeah, the current price deck, you have to ask the question, what's going to be the sustained kind of price? And look, if the prices are going to remain in the 50s on a sustained basis for a period of time, U.S. shale is probably going to start to slowly decline. If it stays in the 60s range, it's probably going to plateau a bit. If it goes back to the high 60s and the 70s, we're probably back on a growth trajectory for a couple of years. But shale is maturing. Those that don't have tier 1 acreage like our company does, we'll start to see some of that deteriorate, and you see plateauing production probably later this decade in the U.S.
But do you think U.S. shale production has peaked?
No, I don't. When we look at our inventory, we've got decades of low-cost supply inventory that's pretty durable over the long haul. And there's a number of companies like our company that have that similar situation. So if we see prices recover back to a mid-cycle and above kind of price in the mid to high 60s or 70s, then I see some moderated growth coming back in the U.S. shale.
I know on stage you told me it looked like this downturn actually in oil prices is different to what we saw in 2015 and 2020. What's so different about it?
Well, I think what's different is we're seeing an expectation of demand falling off with some of the trade and geopolitical things that are going on today. So some are talking about recession, some aren't. We don't believe a recession is coming, but we have seen global GDP back off a little bit. And there's a pretty tight correlation to oil demand growth and global GDP. So there's an expectation out there that things are going to slow, which has caused the price to go down. That combined with extra supply coming from OPEC Plus has put some downward pressure on the price. So this one does feel a lot different than 2015 or 2020.
I know tariffs and actually trade wars have settled somewhat, but what kind of impact have you seen on the industry longer term?
It's been just a smaller impact. For U.S. companies today, most of the impact is in steel and aluminum, which is about 15% of the well cost. But the overall deflation coming as a result of lower prices is overwhelming the increased cost maybe that we're experiencing due to some of the turmoil on supply chains and tariffs today. So overall, the lower price is causing deflation. Rig rates are coming down, frac spreads are coming down, rigs are coming down. Yet there is a bit of stickiness sitting in sort of steel and aluminum. And it's those big high quality projects that are valves and things that aren't manufactured in the U.S. that we have to import from outside the U.S.
Ryan, how do you see the LNG market actually developing? You have huge also, infrastructures here in Qatar.
Yeah, I think it's going to be a remarkable. Our own in-house view is a lot of growth in the LNG coming, probably 1% to 2% compound annual growth, a 400 million ton market growing to over 700 million tons over the next decade and beyond. The U.S. is blessed with a tremendous amount of gas resource. We can fulfill our domestic demand, we can keep prices low, and do an export channel in probably that $3.50 to $4 million BTU. So U.S. will probably set the floor for prices around the whole globe, and we're pretty bullish and constructive on what the LNG markets are going to be, not only from a security supply perspective, but really from a climate and from a reducing emissions life cycle perspective as well.
If you look at the oil prices, do you worry about capex actually in your industry, that not enough will be invested in either renewables, but also just finding, fossil
Well, certainly at the lower commodity prices, the cash flow coming into our companies is less, and you got to reduce the capital. You want to keep your returns back going to the investors. That's important. This business, it is about return of capital and return on the capital that you're investing. So yes, lower cash flows result in lower commodity or lower capital that we can reinvest in the business. But again, we take a very long-term view of that. And the balance sheet in the industries are much, much better. So we have the ability as an industry, and certainly as a company, to withstand some of these cycles that we're going through and the one we're in today.
As a company, where will you invest most and in what time frame?
We're pretty scattered around the whole globe. We're in 16 different countries around the world. North America, the unconventionals get a lot. We have a large project up in Alaska that we're executing. We're trying to grow the LNG business, both in the U.S., here in Qatar. So we're trying to grow and leg into a expanding LNG business. So we're all about low cost of supply, wherever it's at, gas, oil, U.S. or globally. So we're spending about $12.5 billion annually right now, trying to grow and develop the company over the long haul. So we take a very constructive view of what this business is going to look like, and we're leaning in to longer cycle investments today and investing in our shorter cycle shale investments as well.
I mean, if you look at increasing LNG production in the U.S., what does it mean for countries like Australia and Qatar?
Well, I say it's, you might think we're competing, but we're really cooperating a lot, because the natural market for the U.S. LNG is primarily into the European markets, and then Qatar is equidiscally blessed. They can go to the Asian markets and the European markets. So they're supplying some of the Asian markets while the U.S. is supplying the European market. So really it's about a partnership and working together. I think an amazing stat, you look over the next decade and beyond, between the U.S. and Qatar, will probably be supplying 50 to 60% of the world's LNG needs going forward. Now I hope Australia gets better. I mean, now we're talking in a place of all about export controls sitting in Australia. So it's really an amazing sort of juxtaposition of what's happening today. And I hope Australia wakes up and does something different going forward as well.
President Trump has been very clear that he wants, lower oil prices, or at least at these levels. How much does it complicate it for a country like Qatar that has a link to LNG to oil prices, which, for example, U.S. producers don't?
Well, it's interesting. You can link LNG to whatever you want to. Basically, it's going to take a certain price to get a competitive rate of return on the infrastructure that you're building. So Qatar likes to oil link their prices. In the U.S., is typically linked off a Henry Hub plus some margin uplift. But at the end of the day, it almost doesn't matter, because it takes a certain price to incentivize us to build this infrastructure, build the ships required to transport it, and then get a competitive return on those investments. So I don't see that as a lot of competition. And if you have lower prices, you need a higher slope in an oil-linked contract. Or in the U.S., we need a certain margin to incentivize the investments in the capital.
Ryan Lance, thank you so much for joining us today. That was, of course, the Chief Executive of Conocophilips. With that, Kriti, I'm going to send it back to you in London. We'll have plenty more throughout the day here in Doha, Qatar.
Francine Lockwood there with the CEO of Conocophilips, Ryan Lance, giving us a little bit of insight on how he sees the world. We thank you so much. Coming up on the program, a look at what else is making headlines around the world. We're going to dive into it. Stick with us. This is Bloomberg. This is Bloomberg Brief. I'm Kriti Gupta in London. Time now for our front page news. A look at what's making headlines around the world. First up on the Financial Times, Chinese battery giant CATL surging in its debut in Hong Kong. It was the world's biggest listing this year by raising $4.6 billion. Despite being blacklisted by the Pentagon, CATL supplies batteries to top-tier customers such as Tesla, Volkswagen, Ford, and Mercedes-Benz. Next up on the Wall Street Journal, House members plan to try to advance President Trump's agenda of tax cuts and spending reductions. But this party is still split. Trump planning to speak to the broader House Republicans conference today on Capitol Hill, according to sources. Disagreements remain over three major issues: cutting clean energy tax breaks, lifting the SALT cap, and Medicaid work requirements as well. And lastly, the New York Times leading with the Justice Department charging a Democratic House lawmaker with assault. Representative LaMonica McIver was charged over her actions with immigration officers outside a private detention center. McIver, in a statement, said the charges were, quote, purely political. Coming up, we focus right back into the markets. Wells Fargo, Erik Nelson, looking at dollar weakness in the second half. How do we navigate the deficit story and the trade story in that conversation? Stick with us. This is Bloomberg. From our headquarters in London, welcome to Bloomberg Brief. I'm Kriti Gupta in for Danny Berger. Let's set your agenda. Stepping aside, President Trump says Ukraine and Russia would begin ceasefire talks soon, but possibly without the United States leading the charge. And POTUS on Capitol Hill, the president plans to rally House Republicans to unite behind his tax bill as Speaker Johnson fails to reach a deal. And mounting risks, Jamie Dimon warns against complacency as economic concerns pile up. David Rubenstein joining the chorus on those U.S. deficit risks. Let's get a quick check on these markets here. As investors digest all of the things we just mentioned, you are seeing futures on the back foot this morning. NASDAQ 100 futures seem to be where the pressure certainly is. S&P futures, E-minis, down about 0.4%. Of course, Russell 2000 futures also taking a little bit of a hit. A quick check on the bond market as well. As, again, those deficit concerns start to freak out the long end. Take a look at this 30-year yield marginally moving higher in terms of the sell-off there and a bit into the front end of the curve. What does that tell you about assuaging those fears? My guess is not very much. For some more stocks that are moving at the moment before we dive into that deficit conversation, Bloomberg's Joe Easton joins us this morning. Joe.
Hey, Kriti. So a bit of a mixed picture in terms of the Mag 7 today. We are seeing a few of the stocks gaining and a few of them declining. But Google, Alphabet, the one standing out. This is because there is a big AI conference coming up, actually starting today in California. They're going to roll out or show us what they're going to roll out in terms of their AI generation, the Gemini product. Will that be incorporated into the phone, into the other parts of their services? Keep an eye on that one. Then we've got United Health, a gain yesterday of around 8%, continuing to trim that drop that we saw following news of that criminal probe related to Medicare. We've seen the CEO picking up around $25 million worth of stock yesterday. That is helping to boost sentiment. And then finally, UBS sliding in the pre-market on a Bloomberg report saying the company is actually struggling to relieve some of the issues related to their capital holdings. They're going to have around $25 billion on the books. This all a consequence of that takeover of Credit Suisse a couple of years ago. But UBS slipping around 2% in the pre-market this morning. Kriti.
Fascinating one. UBS really trying to fight the curve when it comes to some of those capital requirements. Bloomberg's Joe Easton walking us through some of those early equity movers. We thank you so much. Let's broaden this out, though, and talk about, I think, maybe the looming risk across stock market, the bond market, certainly what caught everyone's eye last Friday into the weekend, which, of course, was the Moody's downgrade. These concerns around a ballooning deficit over in the States. But let me just bring your attention to something that kind of caught my eye over in Japan, which I know it's not something we talk about very often on this show, but let's do it. The Japanese 20-year auction. Now, on first look, this is a very nerdy topic to keep your eye on, but the bid to cover ratio, a.k.a. the demand that you saw for the long end of the Japanese curve, the worst since 2012. Why do we care about this? Well, we care about this because this is ultimately the same deficit story in the States that freaked everyone out on Monday that is freaking the other side of the world out this time around. And you are seeing it because a good chunk of the world, I should say, is dealing with those deficit concerns. The U.S., Japan, will throw Europe in there as well. So how do you trade it, especially when those trade worries are looming in the background as well? Erik Nelson, macro strategist at Wells Fargo, has all the answers. He joins us around the table this morning. Erik, I'm confused. Donald Trump is going to Capitol Hill today. He's trying to get this tax bill across the finish line. He's trying to get these tax cuts across the finish line. And yet the deficit is still a concern. But isn't this the exact conversation we had 2 years ago, September of 2023? So why does the market care now?
Well, a lot's changed in 3-4 months, right? This was, I'm old enough to remember when we were talking about 333, Scott Bessent getting the deficit down a couple percentage points.
You're that old?
Yeah, I know. So obviously the conversation within Capitol Hill and the executive has completely changed around, and certainly we can put sort of the Doge being a huge needle mover on the deficit kind of behind us. So why now? Well, it's, growth in the U.S. is slowing down. Obviously, we have some concerns around people globally kind of moving away from U.S. assets. And the U.S. sort of Congress, executive are all just kind of collectively saying, let's go ahead and push on with 7% deficits for the next couple of years. Let's forget, about big spending cuts and reining in taxes. So it's a very different conversation. There's not a lot of interest here, even from some of the hardliners or people who are kind of borderline hardliners on bringing deficit in. So, that lack of regard has really become full circle and is front and center. And it was certainly highlighted by the Moody's downgrade on Friday, even if that was sort of old news in terms of the actual change.
So does that just mean, just from an investment standpoint, you don't want to touch the long end of the curve in any jurisdiction?
Well, I shouldn't, maybe not any jurisdiction. I think we have to take into account both the fiscal side, but also what the central banks are doing, right? So if you look at, say, a country like, Germany, the fiscal deficit shift there is long awaited. It's also kind of a textbook case for where you want stimulus, right? Underutilized capacity, unemployment kind of structurally high. You're looking at a very different situation there than, say, in the U.S. where, again, growth is slowing. There's the case for continued fiscal stimulus at these levels is less obvious. Also, on the central bank side, let's look at something like the UK. Right? The Bank of England is still actively selling gilts, which is kind of remarkable when you think about it. And the BOJ is ramping up QT as well. So not terribly surprising to see long ends there underperforming.
But that's, the core of the concern on the back end of the curve. Does the BOJ take a step back, for example? Does that set the tone for the rest of the world? But let me play devil's advocate, if I can. Could these concerns be overblown in the idea, and Bloomberg Economics put some analysis out this morning, that they can't actually quantify the tariff impact or the impact of Doge just yet? So the argument that the president and his administration is making that these tax cuts will ultimately be funded by tariff revenue and spending cuts from the federal government, is it fair to say that that's still a possibility?
It's possible. I guess, two questions kind of come about, especially when we think about the tariff revenue as a contributor to the fiscal outlook. One is, how long are these tariffs going to remain in place, right? And this is a question that's on the minds of the CBO. It's also on the minds of foreign investors and just investors everywhere, right? Can we count on this revenue over the life of our investment or over any sustained period of time? The second is, what's the growth impact? Is it negative enough where it's going to make a difference on actually pushing spending higher on things like unemployment, so on and so forth? So it's not a straightforward picture with just, higher revenue from tariffs. That's great. That gives us more sort of repayment power.
From an investment standpoint, though, from just kind of a trading macro allocation standpoint, if you are set, not you, but if an investor was set on the idea that the deficit is going to be around for some time, and you're concerned about the growth picture, which seems to be the consensus on both ends, when does that kind of bond-dollar correlation snap back, given that right now, directionally, they're moving in opposite directions?
Yeah, I think it will. Ultimately, the question here is, what's driving the dollar in terms of across the curve, what part of the yield curve? And it's always and everywhere the front end. When it comes to FX, you want to be thinking about 2 years and in. So what's the Fed doing? What's growth doing? If growth slows down meaningfully in the U.S. and we see maybe not even a recession, but just a 1% or 0.5% real growth rate as opposed to 2 to 3%, the dollar's going to come down on that. And that's really what's driving our dollar weakness forecast in the second half is just a cyclical slowdown. U.S. exceptionalism continues to fade, and the rest of the world does, relative terms, okay. Thinking about more of the long end and the relationship to the dollar there, everyone always asks, are we going to see Liz Truss? Truss's name always comes up. We always have to keep in mind the LDI undercomponent of that crisis in 2022, which you just don't have in the U.S. So can we see some sort of weird ructions short term? Sure. But are we going to see 150 basis points in 30-year and a 10% drop in the dollar? I'm not so sure.
Erik, as you were speaking, we got some headlines coming out of the EU. They are approving the 17th sanctions package against Russia, one that targets a shadow fleet, hybrid threats. This has been in the works for some time as the EU doubles down on some of the pressure on Russia as well, which brings about another question of if the dollar is becoming less exceptional and these fund flows are kind of finding their way into Europe, how sustainable is that?
Well, I think it's perfectly sustainable. I just think it takes a long time, right? So we talked to a lot of big asset managers and people who are kind of driving some of these big flows. The general sense is we're talking about it. We're not taking significant or quick action, right? And that's really the key. I mean, if you look at performance, allocations, et cetera, over time, the general trend has been moving away from domestic markets and moving toward the U.S. So I think the reallocation away from the U.S. comes in the form of, yes, to some extent going into Europe, equities, bonds, but also just bringing money home, whether that's Canada, Japan, or elsewhere.
A bit of repatriation into folding into the market narrative. Erik Nelson of Wells Fargo giving us a broad swath of his views on the stock market, bond market, and, of course, the FX market as well. We thank you so much. Let's go right back to Doha now, where we are live at the Qatar Economic Forum. Bloomberg's Jumana Bersachi speaking to a panel on the balancing of risk and reward in the financial markets. You can also, of course, tune in LIVE Go on your terminal. And a quick programming note, the government of the state of Qatar is the underwriter of the Qatar Economic Forum, powered by Bloomberg.
The Trump administration doesn't like, quote unquote, governments to meddle too much with their currencies. And in Singapore, it's a special case because you set policy via currency. And I just wonder to what extent that has to be factored into your decision making in an environment where the dollar seems to be persistently weakening.
So we manage according to a basket, and so it's not primarily the US dollar, so it's quite a diversified basket of currencies that we manage against. We manage it against a band, and we're on an appreciating slope of that band. So generally the Singapore dollar is appreciating against our trading partners. And there's room within the basket for volatility, so we're not overly concerned about the bilateral exchange rate with any one currency pair. And so there is room for us to manage within that. And generally, over decades, we have built up credibility in our monetary policy regime that market participants will take our signal, and usually the market will bring help us implement that policy and bring us to where we need to be.
Well, Mary, you and I were on a panel in Davos a couple of months ago with His Excellency as well, and we were talking about the outlook for banking this year, and all of the panelists were very excited about the prospects of having a pro-growth administration, what that would mean for the banking sector. And you actually used the term, we've got a war chest that we're ready to deploy. Have you deployed the war chest? How's it going?
Yes, not yet, but I first just wanted to say I really wanted to thank Mayor Bloomberg and all of the Bloomberg administration here for bringing this to be the 5th annual economic forum. It is a really, really important thing, and in many ways Bloomberg is often in advance of the rest of us. And so, and Your Excellency, thank you so much for allowing us to be with you here today for this very important discussion. JP Morgan has been in the region for 92 years. And we serve across 15 different countries. Right after the great financial crisis, we only had about 100 people here. And today, we have 370, and that'll probably be about 500 in the coming year or two. And it's a very exciting place for us to be. And as a matter of fact, I had mentioned we are going to have the JP Morgan leadership team. There's about 700 of us that are going to come and kick off the year of 2026 right here in this great hotel. So I think it is a very exciting time for everybody to be thinking about this. And I think it very much dovetails with all of the conversations that we've had. Actually, the Prime Minister made a great point, which is the World Cup is very much like an IPO of the country, and you can feel it when you're here live and in person. And I think that there's so many things happening in the world where it is a time of great risk, but it is a time of great opportunity, and figuring out how to navigate that is really important. The conversation about the dollar is an equally important one. U.S. exceptionalism has been something that the U.S. is very proud of. But with the world order changing and reshaping itself as people try to figure out where they are, you have $16 trillion worth of foreigners in the U.S. stock market, and just 1% of that is a $160 billion move in the U.S. dollar. So the thoughts of where the dollar goes, you remember back last August when the yen had its short-term movement problems and the markets had a very unsettling, rattled time period for a day or two, especially over that weekend. August 7th, I think it was. And so these are times where you really have to think about what is the right long-term asset allocation. You have been very strong in your feelings about weathering the storm, thinking about your long-term asset allocation. I don't think rating agencies change what people are going to think about allocating to the U.S. versus Europe versus Asia and of course here in the Middle East. I think it's what are the opportunities. You look at the GDP growth of the country here, and we've got a 2.5% rate going north. You got a lot of exciting things. You have foreign direct investments, which you have targets of growing quite nicely, and you have to think about that for your overall asset allocation. And you have to think, how many assets do I have?
You can watch the rest of the panel on LIVE Go on the Bloomberg terminal. Of course, a programming note that the government of the state of Qatar is the underwriter of the Qatar Economic Forum, powered by Bloomberg. We're going to bring you more markets, more analysis after this break. Stick with us. This is Bloomberg.
Since you mentioned IPOs, I do want to ask you, because trading has been, it's been busy.
Big egos involved, I tell you. Big egos involved. But I think something's going to happen. And if it doesn't, I'd just back away and they're going to have to keep going. I would say I do have a certain line, but I don't want to say what that line is because I think it makes the negotiation even more difficult than it is.
President Trump speaking there after a 2-hour phone call with his Russian counterpart. The president warning that he's going to back away if a deal is not reached, sparking fears of U.S. disengagement from peace talks between Russia and Ukraine. Let's get a little bit more insight and perspective on this. Bloomberg Russian economy and government editor Greg Sullivan will join us this morning. Greg, is this a win for Vladimir Putin?
Well, that's a pretty fair characterization of this. Ahead of the call, we heard from Kiev that they were demanding a 30-hour unconditional ceasefire from Russia, and they believed that the U.S. backed that demand. But as the call finished up, what we saw was an agreement to negotiate towards a ceasefire, far from the demand that Kiev had made. In fact, coming out of the call, we didn't see any agreements on a ceasefire, any mention of sanctions, or even additional pressure on Russia. Largely what this does is play into Putin's play for time as he seeks to make battlefield gains to strengthen his position at the negotiating table. He's really trying to achieve his demands through military force, and this basically buys him more time. Additionally, we just heard from President Trump there threatening to walk away from the negotiations and leave them to Russia and Ukraine. That also plays into Russia's hands. So in a lot of ways, this was a big win for Putin coming out of these calls.
Greg Sullivan walking us through the readout from Donald Trump's phone call with Vladimir Putin. I should say he's also spoken to Vladimir Zelensky and several other European leaders as well. Greg, we thank you for that crucial context. Let's go inward here and talk about the domestic politics, because over in Capitol Hill, House Republicans failed to agree on the party's landmark tax bill after some late-night meetings. Representatives from high-tax states continued to frustrate House Speaker Mike Johnson, who has a self-imposed deadline by the end of the week to pass the bill through the House. And that, of course, is before Congress breaks for Memorial Day. Joshua Gallu joins us from Munich to walk us through some of these details. Josh, how close are we to a deal? What are the sticking points?
Well, there are pretty big sticking points that are still there, so it's hard to say how close they are to actually resolving this. The main sticking points are that some lawmakers from high tax states like California, New York, New Jersey, they're looking for bigger deductions, bigger federal deductions on state and local taxes. So this is really important to them. Their constituents feel very strongly about it. They have high property values, high property taxes, high income taxes, and they're pushing really hard for this. Right now, the limit stands at $30,000 as a cap. and some of them are pushing for double that. So that's a pretty big movement, and these people have said this is a no-go if you don't raise it. On the other hand, you have people who are coming from lower income areas who have a lot of their constituents who benefit from not only Medicaid but also food subsidies for children, and those are things that this bill aims to cut spending on. So they're fighting very hard for those, and those go in two different directions. One is going to be a revenue producer. One is not. So Trump is headed to Capitol Hill today and trying to round up the caucus, but I think there's still a lot of work to be done.
A lot of work to be done, certainly, on that deal. Does it assuage some of the market concerns around the deficit, or even kind of boosting some of the consumer spending that we're seeing a slowdown in as well? Joshua Gallu walking us through the details of those conversations due to happen in Capitol Hill later today. Let's go from the politics to the business story. Home Depot shares flat in the morning, in the pre-market, I should say, this morning. The home improvement retailer reporting earnings before the bell, with analysts expecting sales to be under pressure from high prices and tariff fears, not unlike what we heard from Walmart earlier this week, I should mention. Bloomberg Global Business reporter Jennifer Creary joins us now. Jennifer, walk us through what we're watching for when it comes to those Home Depot numbers.
Yeah, well, Wall Street is expecting it to be a slow start to the year for Home Depot. Now, the key metric to look at is comparable sales. Now, they're expecting that to soften in the first quarter, falling 0.2%, and that comes after Home Depot finally turned positive in Q4 after 8 consecutive negative quarters. Now, two main reasons. First being weakening consumer sentiment, of course, over how fast-changing tariff policies will affect the price of home products. Of course, they're getting more expensive. That's going to squeeze already tight household budgets. Now, the second being high interest rates and high home prices. And that's what's really slowed down spending on projects. Consumers simply aren't moving or buying homes as much as they used to. Now, it's not all bad news. Some optimists are pointing to the fact that, Home Depot said that, half of its merchandise is manufactured at home, so it's probably not as exposed to tariffs as other retailers. But, of course, it's going to be a long road ahead for the retailer.
Not unlike what we heard from Walmart. Home Depot and Walmart very much positioned close to each other for that DIY customer retail audience. Jennifer Creary joining us this morning with a preview of those earnings. Coming up, we're going to get you set up for your trading day with more Fed speak and more about the earnings coming up next. Stick with us. This is Bloomberg. Now look at what is coming up ahead today. In the earnings picture, Home Depot is going to be reporting before the bell. We have our eyes on that. Of course, the tariff impact. The Atlanta Fed's Financial Markets Conference kicking off in Amelia Island with President Bostic's opening remarks at 9 a.m. Eastern. And Bloomberg Technology live from Dell Technologies World in Las Vegas. That happening at 11 a.m. Eastern. We will bring you full coverage. In the meantime, I'll leave you with a quick check on these markets. Weakness when it comes to the futures picture. S&P futures down 0.4%. NASDAQ down about 0.5%. And the 30-year yield at 4.92. Euro dollar at 112.54. That does it for Bloomberg Brief. Surveillance is up next. Stick with us. This is Bloomberg.